In today's video, I'm going to share with you guys my 90% win rate trading strategy that has made me over $100,000 and my students tens of thousands of dollars this year. I'm going to be breaking down my exact trading playbook from the intraday fundamentals to the bigger picture time frame to the technical analysis all the way down to the type of order flow. Before I dive into this video, it is very crucial for me to validate my claims. As you can see right here, I have my statistics pulled up year to date for this strategy. As you can see, I've taken 19 trades so far this year. 17 out of the 19 have been winners with an 89.47% win rate, making me over $104,000 in profits year to date. Every trade has been documented with proof and all been done live in front of hundreds of students every single day. So in today's video, I'm going to be showing you guys this strategy along with the real trades that I took in real time. So let's get right into the video. Developing a playbook is going to be one of your best assets to succeed in trading. The playbook I'm going to be sharing with you guys today, I've been developing and refining for the past 3 years. The reason why this strategy has such a high win rate with incredible results is because of the strict criteria that I look for when trading this strategy. Before I get into this, I want to mention that the results that you see are not common. They're based off of my personal trading results over the past few years. I've been developing this and refining it to my personal liking. I'm going to be showing you guys how to develop your own playbook so you guys can have your own entry, exit criteria, what to look for on the higher time frames, how you guys can mold it to your liking and trading personality, and that's what exactly I'm going to show you guys in this video. Before I get started, I want to talk about what is a playbook and why is it so important. A trading playbook is essentially compiling a comprehensive document outlining your trading strategy, including setup conditions, entry and exit criteria, risk management rules, and trade management guidelines. The best analogy that I always reference when talking about the playbook is the football analogy. Whenever you have a professional sports team like the NFL, what we have is offense and defense. You have the offensive side of the ball and you have the defensive side of the ball. For example, let's talk about the offensive side of the ball. The main objective for the offense is to score touchdowns. If we're looking to score touchdowns, what do we have to do? We have to run certain plays to get into the end zone. We're trying to get into the end zone as efficiently as possible. What we have is we have head coaches, we have offensive coordinators, we have people that are tracking statistics, and what they do when they're not playing, they're looking at these statistics, they're looking at the tape, they're finding the best ways to optimize their potential to score in the most efficient way as possible. And that's the exact same thing as in trading. Whenever you're trading, we're going to be looking at the entry criteria, the setups, what type of market cycles are we in, the type of risk management, the trade management guidelines. How are we going to develop our playbook? We're going to be developing a playbook by compiling statistics. Over a long period of time, we're going to have statistics, we're going to have a playbook outline, and we're going to find out which best setup is going to be used in certain market conditions. So organizing this playbook in a clear and concise format, making it easy to reference and follow during live trading sessions. And that's what I'm going to show you guys how to develop a playbook. Every successful trader talks about having a playbook and understanding that not all setups are equal. Not every single break and retest is equal. There are plenty of different types of break and retest. There's around 10 to 15 different setups. Not all setups are equal. Not every single break and retest is equal. That's where you have to develop your playbook and understand what type of trades that you're looking for on a day-to-day basis. So with that being said, let's go on to the criteria that we're going to be looking for to develop our playbook. As you can see right here, I'm on this slide, and there's essentially 4 main things that we're going to be looking for when it comes to developing our playbook. Number 1, being the bigger picture, what is happening and developing on the higher time frames. We're going to first start off on the weekly and daily time frame. What are we going to be looking for? Number 2, intraday fundamentals. Do we have a major shift in the fundamentals of the asset that we're trading? Number 3, what is going on with the technical analysis? What type of setup that do we have forming intraday? And then number 4, type of order flow / volume. Do we have some sort of relative strength? Do we have some sort of relative weakness, divergence? What type of volume is coming into the markets? So these are some of the questions that you just have to ask yourself when setting up a trading playbook. The higher time frames, are we in an uptrend? Are we consistently making higher highs, higher lows? Are we in a downtrend? Are we making lower highs, lower lows? Or are we consolidating on the higher time frames? Intraday fundamentals. Do we have any sort of news event that's happening? Do we have CPI, FOMC, PPI? Do we have earnings? Do we have a pre-anticipatory earnings run? Do we have a post-earnings run? What is shifting in the overall fundamentals? Is something happening? Is there some sort of news report that's coming out? Is there some sort of information that's fundamentally changing the company? Technical analysis. What type of trade management are we applying? What are our entries like? What are our exits like? What type of setup that are we going to be looking to apply intraday to try and capture those higher time frame trends? Type of order flow. Do we have relative strength and weakness? Is the name showing some sort of strength compared, relatively speaking, to the NASDAQ? Is the market weak compared to the SPY? Or do we have some sort of divergence in the market? If we're not correlated, do we have divergence? And why are we diverging away? So these are just some of the things that we have to ask ourselves, and it's very important if we're going to be developing a trading playbook. So let's go into one of the examples that I have for us today. So we're on Nvidia's weekly higher time frames, and we have to ask ourselves, are we bullish? As you can see, we're clearly making higher lows towards the upside. We're very much bullish on the weekly time frame. Next chart, we go on to the daily time frame. What's happening on the daily time frame? We're forming this big wedge pattern. As you can see right here, we're very much bullish on Nvidia. The weekly's bullish, the daily's bullish. We're consolidating above our flip zone, which is our 891 level. So we can expect continuation towards the upside if we have a breakout. So what's next? We have what's called our intraday fundamentals. This is any potential news. Do we have earnings or major news catalysts that are potentially coming up? As you can see right here, what we had was a pre-earnings run up. So pre-earnings on Nvidia was very much bullish. The higher time frame was bullish. Everyone was bullish coming into earnings. So what we had was called a pre-anticipatory run up towards the upside. Next, what we have is our technical analysis. So coming into market open, what type of setups do we have? We have the opening drive play. We have the gap and go. We have the dip and rip, 5-minute break and retest, 1-minute break and retest. When you have so many different setups in combination with one another, this is what's called multiple confluences. So as you can see in this case, our key level was our 922 level. You can see price ended up holding this level coming into market open. We end up tapping this level very nicely. Buyers are stepping in off this key break and retest level. We also have an opening play as well, a gap and go. And then you can see we have the 5 and 1 minute break and retest, and you can see that's where our entry level was after buyers stepped in off this 922 level. Our higher time frame objectives was key levels above, and that's where we have that very nice push towards the upside due to all the setups and confluences that I mentioned. Next is order flow. Do we have any sort of relative strength or weakness? As you can see in this case, we have our Qs pulled up right beside Nvidia, and you can see clearly we have our opening candle low marked out, and our opening candle low is all the way down here on Nvidia. You can clearly see that we're a lot more bullish on Nvidia compared to the Qs. You can see the Qs start pushing down here, whereas Nvidia, we have that hold of essentially your 922 level, and that's where we start pushing towards the upside. You can see as soon as the Qs reclaimed our key level, which is your opening candle print, we also have that push back towards the upside, and that's where we had Nvidia launch towards the upside. So we're going to be looking for some sort of key relative strength or weakness. So with this being said, let's go on to a more recent example on a trade that I took last week. As you can see, we're on my second example right here, and this was actually a more recent example. It was on Amazon August the 2nd. So it was last week on Friday. Absolutely beautiful trade towards the downside. As you can see, I ended up making $7,000 on this trade, but what matters is not how much I made, it's how much I risked. As you can see in this trade, I was only risking $1,000 on the contracts and ended up making over 6.2 R. So this is a 1 to 6.2 risk to reward ratio. Absolutely insane trade. You can see only put in $5,000 and then making over $7,000 on this trade for a 131% return within 8 minutes. The rest of my remaining contracts I ended up getting stopped out. So it's a little bit longer than 8 minutes, but 90% of my position I took off within 8 minutes of this trade working out. So let's go into exactly what I was looking at and how I was developing this playbook coming into market open. So you can see the first thing I was recognizing on the higher higher time frames was that we recently were just at previous all-time highs on Amazon. This was a high all the way back from 2021. You can see we end up getting above this level, we end up rejecting it. So we end up rejecting this previous all-time highs level, essentially sweeping out this liquidity all the way towards 200. You can see now as well, we have what's called a gap down. So we have a huge gap down in the markets. This is actually due to earnings, and now we have room all the way down towards this gap fill, which was this earnings gap up all the way back in February. So the higher time frames just rejected off the previous all-time highs level. So now we're going to be looking for shorts coming into the day. Intraday fundamentals, you can see here as well, we just had earnings. So this is a post earnings play. You can see Amazon right here tumbles 11% in the pre-market as profit revenue outlook starts to disappoint. So we have bad news. Higher time frame is bearish as well. So now we're going to be going on to the next part of the playbook. The next part of the playbook is your technical analysis. So coming into market open, what type of plays do we have towards the downside? We have the gap and go on the higher time frames. We also have that gap fill, which is all the way back from that February gap that was actually a gap up. So we have that potential gap fill towards the downside. We also have an opening play that we can look for, and we have essentially your pre-market low break towards the downside. So you can see right here, we had your pre-market low drawn out, which is your 165 level. So you can see right here, price is flirting around this pre-market low. We're already bearish on the higher time frames as well. I'm going to be showing you guys that we're relatively weak, and that's where we look to get in off this higher low. And then we can see we have that flush underneath your 165.3 level all the way down to your higher time frame objectives, which end up being a super solid trade. You can see on the next slide as well, what we had was relative weakness. The order flow was bearish. As you can see, we had that pop on the Qs. We end up popping back towards your pre-market high. We can see in this case, Amazon was staying heavy. You can see the discrepancy between these two names within the first 10 minutes. Amazon was at low of day, the Qs were at high of day, and that's where you have that relative weakness in play. And then you can expect the Qs, as it starts to reverse, Amazon have a big push towards the downside, and that's exactly what happened. So with this being said, let's go into the live trading that I have for us today. One thing I want to make very clear is that I take all these trades live. A lot of traders will talk about this in hindsight, but every single trade that I talk about was done in real time in front of hundreds of students. So if you guys would like to live trade with me every single day, the link is in the description below. So with that being said, let's get on to the live trading session. So as you can see right here, I'm on my live trading session for the day of August the 2nd. This is the live session for the Amazon trade that I just talked about. And now I want to walk you guys through exactly how I was able to capture this move in real time. The main watch I want to keep an eye out on today, this morning, is Amazon. We have an earnings gap towards the downside. We have this other gap, right, due to earnings all the way back from February. So if it can get inside this gap, we could see a nice push towards 159. So that's going to be my main watch coming into today. What I want to see is essentially an IV flush. I want to see a pop it open where the contracts, they get IV crushed, and then we can look for a push towards the downside on Amazon. So as you can see right there, I end up just talking about Amazon. It was my main watch coming into the day due to the higher time frames, due to the bearish earnings as well. What I wanted to see was an IV crush on the contracts where we can get the contracts for cheap, and then we can look for that opening play towards the downside. Now I'm going to speed up my tape here until we get to my entry. So Q's rejected off your 553, which is your 830 high, right? On the higher time frames, we're still bearish on the Q's. It's just kind of inside this range currently. I'm still interested on Amazon. We'll see the reaction we have around this key level for a push towards the downside. That's really the only ticker I'll be looking to kind of short. Okay, I bought some Amazon 165 puts here. I like this kind of rejection off of this Qs, and if Amazon can get underneath, if it can close underneath low of day, it can have a clear shot and flushed all the way down towards really 159. I really want to see the relative weakness. I still am bearish on the Qs on the higher time frames, so I kind of want to see really the Qs start kind of gravitating back lower, and then I want to see Amazon head towards the downside as well. So you can see right there, I ended up entering Amazon puts, the 165 puts towards the downside. I mentioned that this is relatively weak compared to the Qs. You can see Qs end up rejecting off of your 830 high, which is your pre-market high. I wanted to see more continuation towards the downside. You can see right here, essentially the entry model was looking for a break below your opening candle print, which was your very key level. I was looking for continuation. If it could get underneath this key area with that relative weakness, right, we have a lot of room towards the downside, towards that daily gap. So that's what I was looking for on Amazon. And now we'll see how the tape plays out. Amazon, this candle is most likely, yeah, it's closing underneath low of day as well. So we should have more continuation towards the downside. You can take some off, just do the 0 DTs, but it really has clear room all the way down towards that daily gap on the higher time frame. So as long as the Qs kind of stalls or kind of gravitates towards the downside, Amazon should be the leader, with it being the gap fill all the way down towards 161, 161.72, and then 159.68. So you can see I just mentioned we had that strong candle closure underneath low of day on Amazon. I'm expecting a potential bigger move towards the downside. There's really nothing stopping Amazon from heading lower with the relative weakness in the Qs and the higher time frame daily gap as well. I mentioned my main objective was really that 161.70, which is that daily gap on the higher time frames. Yeah, I took a lot off right there as it was coming back down towards that 160.70 level. I'm gonna hold my final trailers potentially all the way down towards 159, but right there, that was an absolutely insane trade on Amazon, right down towards that 160 as it gave up. So you can see right there, I just mentioned that I took most off of my position right there at that 161.70 as we're approaching that key level. The contracts at this point, they're up over 200% within 8 minutes. Absolutely monster trade towards the downside, and you can see the spillage as soon as we got underneath that key level, which is your 165. We had that big push towards the downside. You can see not a single green candle, and we end up continuing lower as well. And that's what happens when you trade those higher time frame textbook setups along with the relative weakness as well. Let's see, how about majority now? So I'll just let traders run. Yeah, so that was essentially an earnings play, right? If you're stuck on the lower time frames, it would have been very hard to capture. That's based off the higher time frames with the news factor, with that gap on the higher time frames, and weak earnings. Essentially, like kind of like an earnings play. You'll see a lot of these. It was like Nvidia way back, and now you can see it flushing. Now it hasn't even had a green candle. That's what you like to see when you're trading 0 DTs. It doesn't have a single green candle on that push after it broke 165. It has clear shots down towards that 159 that I talked about, that daily gap on the higher time frames. I mentioned it can move pretty quickly if it can flush underneath that 165, and now you can see exactly where it gravitated towards, right at that key level. Right, look at this daily gap that I mentioned. If it gets underneath here, now this looks like a classic break and retest of this level all the way down towards here. Right there, that was basically my full trade for Amazon. I ended up leaving 10%, got stopped out the rest of my contracts, but absolutely beautiful trade towards the downside. The whole community was able to capture that trade towards the downside as well. Absolutely beautiful trade, 200% in 8 minutes. And that's one of those trades that we can look back on, and that's within our playbook. And it was a textbook setup towards the downside. I hope you guys enjoyed that video. If you did, I appreciate if you guys drop me a like and sub, and I'll see you guys next week for a brand new video. Peace.